you're calling in from, as you're logging on, drop it in the chat. And also, I want to welcome each and every last one of you all to BYOB Market Talks. This is Tasha M. Dyer, the Trade Whisperer. Welcome, welcome, welcome to BYOB Market Talks. Now, ladies and gentlemen, also, we're going to talk about your affirmations, right? We're going to make sure we get that right. What are your affirmations? I am a master trader. I am the signal. All my trades end in profit. I am 777, right? I am a master trader. I am the signal. All my trades end in profit. I am 777. Now you can add to it. You can definitely add to it, but don't take away from it. You have to walk in the energy that you want to be. You have to walk in who you are and what you know that you are. And so as we're logging in and as we're getting this call started this evening, if this is your first time with us, let me get a 111 in the chat on BYOB Market Talks. All right, so I see we got quite a few new people, and if you are still learning how to cash out, let me get a 222. I see we got some 111s and some 222s. So first and foremost, let me welcome each and every last one of you all to BYOB Market Talks. Let me welcome you, welcome, and welcome back, Now, I'm gonna talk about affirmations as we get started because we got some new people on the call. And as I stated, I wanna welcome you all. And we have, some people who are still learning. And we have quite a bit of 777s in the chat. And our indices did, they ended up going a direction after they rose a little bit, right? It kind of did exactly what we thought, what we talked about. But I know some of the things that we talked about this morning is because you'll see some individuals that dropped that 777, right? You'll see some individuals that dropped that 777, but then you'll see some individuals that still are waiting and talking about cashing out, right? So what are the affirmations? We're gonna go over them again. I'm glad you asked. I definitely asked you I will tell you what they are again. And so the reason why I'm bringing this up is because before we start anything, when you're on a live call with us, when you start these evening calls, we're gonna start with your mindset. In order to be successful, period. In order to be successful, you have to begin with the proper mindset, right? It's going to begin with the proper mindset. And so that's why we begin with these affirmations. So I'm gonna talk to you about your affirmations. So what the affirmations are is I am a master trader. I'm a master trader. Obviously, we've embarked upon a journey that we want economic empowerment, economic emancipation, economic. So economic. So you are the one that's going to create that economic freedom for your family. I am the signal. We're talking about real wealth and freedom. So this is what that is. I am the signal, meaning signals will not generate wealth. You being the signal, understanding how to read the market, understanding the market will. So all my trades in profit. You speak it. What you speak is going to manifest. The strategy is back tested at 92% accuracy. What you speak is what's going to manifest, okay? So that is where you want to walk in. That is what you want to believe. So I want to speak profit. I want to speak the manifestation of profit over my trades, okay? You want to speak that. Now, 777, the 7 is what we have decided and what we declared and decreed. When you look in the Telegram chat, all you see is 777, 777, 777 in the chat. Drop your 777 in the chat. So that's that wealth. That's that wealth. So I am 777. Dr. Bythewood did a call, a talk with the finance doctor, a call that you should definitely be on, a call that you should be a part of, a call that you should definitely be in tune to, right? That you should always, you should not hang up this call after we finish here. You should always be in tune with Dr. Bythewood as well, because you want to understand why you're doing what you're doing. So this should be your evening on Tuesday and Thursday. So that I am 777 is that wealth generation, that mindset shift. And if you listen to the I am 777, you know why we added that to the affirmations. Now, anything else that you add, right, fine, add it. But as you begin to walk this journey, as you begin to walk that, you definitely want to understand that. And that I am is that declaration. That I am is definitely that declaration that you're walking in. So understand that. So this is why we do this each and every single call. And this is why you don't see my screen until we do that. So now, yes. So now let's go ahead and get my screen share going. And we're going to talk about, you notice that same chart from this morning. But we're going to talk about the BYOB cash out, and I promised this morning we would talk about some trends, okay? So let's come back over here and talk about what the BYOB cash out is, and then let's talk about some trends. Now, I still have this marked up. Take a good look at this, okay? Take a good look at this on the hour. This is one of our trades from this morning, right? This is one of our trades from this morning. So now, as you look at this from this morning, right? And where did I say it was going to stop? And you see this thing still has not really pushed past there, right? You see where it's still at. So this is why this topic came up this morning. And we were definitely going to walk into this conversation to understand these trend lines, but I definitely want to make sure that you understand this, because look at this trade. So it's important to understand, right? It's important to be able to understand, because they're going to help you identify those points of where the market goes, where it stops, you know, how you can help see the market. So, you know, we started pulling the trend lines up on here. Hikanashi candles are trend candles, but let's talk about what the BYOB cash out is. Doesn't make sense to talk about anything else until you understand what the BYOB cash out is, right? Doesn't make sense. Now, understand, here we go. Now, what is the BYOB cash out? BYOB cash out. Three indicators, okay? Now, I'm actually delete this, because this was, like I said, this is this morning setup, and I'm just gonna delete this because I want you guys to focus on the BYOB cash out. That's what I want you to focus on. Now, what is the BYOB cash out? As I'm looking at this, you can see I'm first looking at my stochastic. Is made up of three indicators. I have my stochastic, I have Hikanashi candles, and I have a PSAR. I got a stochastic, I got Hikanashi candles, and I have a PSAR. That is what the BYOB cash out is, okay? Three simple indicators combined together, okay? You need all three in order to make up the BYOB cash out. Now, what I want you to understand is that as we're looking at this, my stochastic leading indicator, these two lagging. These candles are an indicator, okay? These candles are an indicator. So they're not Japanese candles. They translate, they interpret. That is why they're a lagging indicator. So I'm gonna go ahead and answer this question up front. You do not have to wait for it to close. You do not have to wait for the next candle. You do not have to wait for any of that. This is why. This is a lagging indicator, and it is already, all that's already happened. It translates, it transforms, it does all of that for you, right? So now, when you look at this, I got my stochastic first and foremost. Now, you see this runs from 0 to 100, okay? 0 to 100. Now, you see that in this shaded area, my shaded area goes about 20 to 80, okay? My shaded area goes about 20 to 80. Now, what I'm looking at is this blue line cross over the red in an upward momentum, okay? Blue line cross over the red in an upward momentum. Blue line cross over the red in a downward momentum. That crossover and cross down, or this crossover and cross up is important, okay? Crossover, cross down, look at that, it's important, okay? That's important, that's important, okay? I want you to understand that's important. So now, when I'm looking at this, okay, I got my blue line cross over the red in upward momentum. Now, I got a green candle because now I know I'm looking for a buy. What determines the direction I'm going? If I'm buying, if I'm selling, is where we headed right here. So if this was in a sale, right? If this was in a sale, okay? If this was in a sale, okay? If this was in a sale, then I would not be looking at this, right? I would not be looking at this if I wouldn't be taking this in a buy, okay? I wouldn't be doing that. So understand that. Now, look at this. Blue line cross over the red in an upward momentum. Blue line cross over the red in upward momentum. Green candle, flat bottom, right? Green candle, flat bottom, okay? That's what I'm looking for. And then also, what I have is my PSAR. My PSAR needs to flip to the bottom. This PSAR is that trailing stop loss, that momentum. That this measures momentum, but this is that trailing stop loss. That's exactly what this is. This is that trailing stop loss. This is, right, this is that price reversal in the market, okay? That's what this is, okay? I want you to understand that. Now, your stop loss, before I talk about time frame confluence, let me help you understand. Your stop loss, because I'm talking about a PSAR, your stop loss will never go on the PSAR. It will always go below it. How far below is completely up to you, okay? How far below, completely up to you. You gotta understand that. Now, let's talk about time frame confluence, because right here, okay, I got my blue line cross over the red and upper momentum. I got a green candle, flat bottom, and a PSAR flip. So right here is literally where my strategy aligned up. Right here. This is the foreign exchange market. This is the foreign exchange market. So this is what we're talking about. This currency we're looking at is NZD CAD. Is NZD CAD. That's the currency we're looking at. So if someone invited you to this call, that's part of what should be explained to you before you get on this call in this a little bit. This is foreign exchange market. This is the foreign exchange market. But welcome to BYOB. So now, when you look at this, you got a blue line cross over the red, green candle, PSAR flip to the bottom. Now, what you want to do is you want to drop down, okay? You want to drop down. And when you drop down, you see that this needs to still be buying. Now, I got this, since we are trading on higher time frames a lot. Now, I even got this question today. And what I want you all to understand is that when we drop down, okay, to the lower time frame, this needs to still be buying. Like you see right here, this needs to still be buying, okay? It needs to be buying. This has impact. What I know has been happening is you guys will drop down, and because we're only on a 15-minute, this the 5-minute. The 5-minute corrects a lot faster than the 15 corrects, right? So when we drop down, you see this needs to still be buying, okay? And when we go to the hour, because the lower time frame is about my entry point. The higher time frame is about my confluence for the market. So keep that in mind. And when we go up, now what do I notice? I notice that right here. I'm not confluent. I'm not confluent. You don't know that it got confluent. This is what you see. So you see that right here, I still got a little bit where it's about to come. So where that stochastic is getting that curve. So right here, this literally happened at the top of the hour. So you really got a whole nother hour. So you can walk away from this and come back and check it in an hour, because we just got this at the top of the hour. I'm explaining time frame confluence right now. I'm actually explaining it right now. So what do I mean by confluence? What I'm speaking about. So when you look at on the hour, okay? So I need to wait for so when I go to the next candle, okay? When I get to the hour, that's when I'll actually have my confluence. So now you see when I drop back down, because I'm trading on this time frame. I'm trading on the 15-minute. So on the 15-minute, everything has to be in alignment. Everything needs to be in alignment. I couldn't enter this trade here. Great, it's wonderful that everything was set up here. But remember, I'm using trend candles, and my trend candles before that did not allow me to see my trend candle before me. When I checked my confluence, my trend candle before did not tell me that this was in a sell. So, did not tell me it was buying. So you see it's selling, right? You see it's selling. So what I do is I drop back down. I cannot enter the trade right then. This is how you keep your accuracy up. So this is how you keep your accuracy up. So I'll walk through this again. Let me walk through this again. So you understand, this is the BYOB cash out on this time frame. This is the BYOB cash out on this time frame. On the 15-minute, on the time frame that I'm trading on, this is the BYOB cash out. Now, time frame confluence is I check the 5-minute, which I drop down lower, and I check the higher, and I go up to the hour. So that's what time frame confluence is, okay? That's what time frame confluence is. So you have the strategy itself, which is BYOB cash out, and then you have time frame confluence. So time frame confluence is I drop down to the 5. I drop down to the 5, and then I go up to the hour. So I have to check the hour and the 5-minute. Now, what the hour tells me is the direction of the market, right? That tells me the actual swing of the market. The hour tells me the actual swing of the market. The 5-minute tells me, the lower time frame tells me is about entry point. So the higher time frame, so the lower time frame gives me entry, the higher time frame gives me, the lower time frame gives me entry, the higher time frame actually gives me the swing of the market. So what that does is I do not enter a trade, right? I do not enter a trade. I do not enter a trade if I do not have time frame confluence. Hopefully that helped with that question about what do I mean about confluence, because I know I'm explaining it, but hopefully that helped bring some clarity to that. Hopefully that helped bring some clarity to that. So a 555, if it brought some clarity to that, because I will explain it again. Because what I want to talk about, you know, I want you guys have to understand that. So I really want to make sure. What was somebody who asked me about? Somebody asked me specifically about confluence. So okay, I got a 555. It's not a name. It says iPhone. So hopefully that's the same iPhone. So. No, the stochastic does not have to be confluent. But with the stochastic, what you want the stochastic, understand. So like, let me go up to the higher time frame.
Ms. Dyer, can I ask you a question, please?
Yes.
So just for understanding for our new individuals, is it Fair to say that time frame confluence prevents us from entering into a trade and a pullback?
Yes, it'll help you from entering in a pullback, but it'll also help. Some of the trades we take will be in a correction, but it'll help you from entering the trade in the wrong direction. It'll help you making sure you're entering the trade, because sometimes we have that your pip reaction time and your broker spread. So the trade is actually a good trade just based on the BYOB cash out, but adding the time frame confluence eliminates, it helps take over. See, the 92% accuracy was just on the cash out, BYOB cash out, but adding the time frame confluence, it really helps eliminate that pip reaction time, and it really helps eliminate, you entering a trade because you have your pip reaction time as well. So it helps you in understanding, and you're actually going with the momentum, the current swing of the market, and also that pullback. Without doing that pullback, you're saying, so you're checking the higher time frame for that current swing of the market and that lower time frame to make sure we are not doing a pullback. So to go back to this question as well, great. So to go back to this question about the stochastic, right? About the stochastic. When I'm talking about the stochastic, when you're looking at the confluence, okay? When you're looking at the confluence. So if I'm looking at the confluence, what you want to understand is that while yes, as I'm looking at this, with this being on that higher time frame, and I definitely looking for, because I'm looking for a buy, I'm definitely looking for a green candle. Now understand, this is an art and not a science, okay? Everything is not going to be picture perfect like this one is. Look at how my stochastic is pointed up, right? Look at how the stochastic is pointed up. So, and look at what is happening right here. I got my stochastic pointed up, and I got my stochastic is pointed up, and I have, you can kind of see, but what you don't want to do is, like, it's not gonna, it's actually down here to 22. So that's not gonna always be the case. This one is just picture perfect. What you do not want to do is take it if it's selling. If this is selling, you do not want to take it. If this is selling, you do not want to take it, okay? If that's selling, you do not want to take it. So, because it's a reason why. So like right here, you can kind of see this. You see how it's kind of moving with it? I got red candles. I got my stochastic is moving with it. You see it's like flowing with it. You see it's flowing with it. You see how it's flowing with it. But if you come here and you're looking for a buy and that's in a sale, this is not adding up. We'll get to what that's called in further trainings. We'll get to, right, it's not in alignment, but we'll get to like what it's called and how to actually spot that and how to read that. It's coming. We'll definitely get to how to point that out and things of that nature. But this is, oh, you're gonna give it away for me? You're just gonna give it away, the divergence? But yeah, that's really what it is. It's divergence. So, but I'm just messing with you, but that is what it is. So, but what this does is it really helps you, see that this is an alignment. So you really do help you see that this is an alignment. And so if this is selling and that's buying, it's not in alignment. It's just not there. So you do want to make sure, well, like I said, this one is almost picture perfect, right? This one is almost picture perfect. They will all not be there, right? They will all not be picture perfect. So you're going to have to look at some of them. So this one just happens to be picture perfect. So do all time frames need to be selling, or all 3 time frames need to be buying? Right. So you notice we didn't get into this trade until we saw the buy here. We didn't get into this trade. That's what confluence means. The difference is, this is what your difference is. On this time frame, right here on this time frame, you literally, this is where I need my BYOB cash out. The time frame you're trading on is where you need the BYOB cash out. Everything in alignment. I got my stochastic, my PSAR, my stochastic, my candle, flat top, flat bottom, and my PSAR, okay? That's where I need everything in alignment. When I drop down for that tighter entry, okay? When I drop down for that tighter entry, I'm looking for things to be buying, right? So you can kind of see where we had like some correction here, okay? You kind of had some correction here. You see how this is selling right here. So we would have waited. We would have waited a little bit, you know, we would have let that pullback come out of the correction right there. And then of course, and you guys have been on the call with me and I'm like, wait, you know, because you want to get out of the correction. And then of course, you see the correction. I mean, you see my confluence starting on a higher time frame. This is about my current swing of the market. So at this point, we haven't even talked about a take profit yet. So at this point, yes, you get in a trade as soon as that shows confluence. So do you need to catch the first candle if the PSAR flip in order to get time frame confluence? Do I need to catch first candle of the PSAR flip? That's when you start looking for it. That's when you start looking for it, but it's no guarantee. It's no guarantee that you're gonna find it right then and there. You see how we had to wait until we got the hour confluence. So we had, on this particular trade, we had to wait. So it's no guarantee that that's when you're gonna find it. So, but the BYOB cash out is that first, is when you get everything in alignment, and then you wait on the you have to wait. And sometimes you'll be thankful because you'll see that pull back and then they'll come back up on those lower time frames. So now you take profit. Let's drop back down. That helps you when you enter a trade. That's gonna help. Just walk with me. So you might get a little pullback, but that's gonna help you, especially when we get to these higher time frames. So, you know, you want to, that's great. You'd rather wait than jump in and lose. Thank you for that. Because when you do that, so, and let me show you guys something. I'm gonna show you guys something. This training might, you guys have a lot of questions tonight, which is good, and I'd rather get them answered. So tonight's training might actually take 2 days now. We might do it in 2 parts because I really want to make sure you all understand this. So, and that's okay, you know, that's okay, because it's all about understanding. So, and you're gonna have pullback, but you don't want to have a lot of pullback. And so how you do one thing is how you do everything, right? How you do one thing is how you do everything. Because when you get to the next time frame, you'll have more pullback. So you want to make sure you're executing to the highest level. You hear a lot of time people say perfect practice, right? You see a lot of time where people will be like, you know, practice makes perfect. And so no, if I practice wrong, then I'm not gonna make perfect, right? So you want perfect practice. So if I do it, so even though on my 15-minute, when I drop down to my 5, when that 5 pulls back a little bit, it might not be as great. Then when you start trying to go to the hour, you wonder why the trade didn't play out, or you wonder why, you know, it didn't move the direction or how you wanted it to. You know, you wonder what was transpiring or what was going. And that's because you didn't craft in on your skill set to drop down to that 5-minute. Because when you get to that hour, that drop down to that 15-minute is critical. Those 3 time frames coincide and they work. The confluence, you need all 3 of those time frames. And so when you're on that hour, that 15-minute is critical. And on the 15-minute, the 5-minute is critical. But the pullback is not going to be as great because that hour time frame is really the decision maker, right? That's that swing of the market. So a lot of you will start trading and you'll be like, oh, I didn't look at the 5. I get a lot of feedback. I wasn't going down to the 5. I wasn't looking at the 5. Or, oh, well, I knew it was going to come back around. That's not the mindset you need to be in. You need to make sure the 5 has to be buying. The 5 has to be selling. The 5 has to be buying. The 5 has to be selling, right? You want that mindset, because when I get to that hour, if my 15 is going into a pullback, you need to let that pullback happen before you get into that trade. Because what if it doesn't pull back out of that pullback? What if that's actually a shift or a change in direction? So I might have my hour and my 4 hour lined up, which I'll get to that. Let me show you in just a second. So let's take profit. Let's take profit. Let's take profit on this trade. So my take profit is literally 10 pips and cash out. Once you begin to understand your support and resistance lines, right, then you can literally go to your support resistance line and you actually get more, okay? You can get more pips once you do that. So that is how you take profit. That is how you align this. So I can go to my support and resistance line, or I can actually just do 10 pips and cash out. So it's always going to go to that support resistance line or those 10 pips and cash out. That is the BYOB cash out with time frame confluence, okay? And so trade from this morning, perfect example, okay? Did not have, you know, after that initial drop, right? After that initial drop did not have confluence, okay? Initial drop, broke through the trend line. We're talking about trend lines tonight. Broke through the trend line, did not have confluence, did not have confluence, did not have confluence, right? And when it broke through the trend line, you see how it pulled back up. So this was the correction from this morning. So this is what I want you to understand. 15 minute, okay? So on the hour time frame, right? On the hour time frame, like I have this circle. So on the hour time frame, or was that, it was somewhere. That's not it, because that's too low. That's too low. I'm trying to remember from this morning. I know we had, now it's been played out too much. So it's got to be over here. But I know what happened. Oh no, this is the one from the other day. It was this, I had to wrote over it. Oh goodness. I wrote over it. So that's what happened, because it would have been right here in this area. I wrote over the trade from this morning. So let me show you. So this one, it came down and it broke up. So yeah, I had the charts marked up and it is okay. So long story short, anyway, so here you go. You got this one, but they were both NZDs and they both played out the same way. It's just one was from Monday and one was from Tuesday, right? One was from Monday and one was from Tuesday. They both did the exact same thing. And this one is actually still marked up from Monday, okay? This one is literally still marked up from Monday. So this one I left on here intentionally, right? So this one is, I mean, same story, same situation. Same story, same situation. So I'm gonna just delete this. So I'm gonna just delete this because that would have been today. This one is from Monday. So what we're looking at is when you literally got this to play out, what we did not have was confluence though. When we dropped down, the trade had played out. And so when the trade had already played out and it hit down here, you know, you have to have it on every single time frame. You got to have it on every single time frame.
How you gonna?
So when it plays out, you have to have it on every single time frame. And so because we didn't, when we got down to, and like I say, on a 15-minute chart, so what happened is everybody took the trade on the 15-minute chart. When we got down to the 15-minute chart, then you actually had an opportunity to take the trade for a buy. As you can see, this is where it stayed. So the point that I was trying to make out, regardless of what currency I'm looking at, right? Regardless of what currency I'm looking at, the point that's being made here is I can be over here, I can be here, I can be anywhere. Is I have to have the hour, the 4 hour, and drop down to the 15. If you see that when we get here, when we get over here somewhere, like this was that initial push, right? Let me go to the hour. So this is that push. When we get there, when we get here, because it came out of there, look at these, okay? Here we go. Now look at what my stochastic is doing, okay? Look at what my stochastic is doing on my confluence. My stochastic look like it's trying to push up. These are not strong, even though they're red, look at the candles, right? So remember we talk about it's an art and it's not a science. Look at the candles. look at it broke the trend line, but look at the 4 hour from the hour. My 4 hour is where my confluence happens, right? Now look at my stochastic though. So look at my stochastic. My stochastic's not look like it's trying to go down. So I got a weak 4 hour candle. And remember, this candle took 4 hours to make. So we know it wasn't that strong when it first hit, right? We know it wasn't that strong when it first hit. And that's weak at the end of 4 hours. So that's not strong. So imagine this being weaker. Now, then my stochastic is pointed up. That in itself speaks volumes. So the other one we looked at was a perfect setup, right? The other one we looked at was like a perfect setup. But when I'm looking at this one, look at the confluence on this. This is very weak. So if it's this weak, I'm not very comfortable relying on this for a sale, right? I'm not very comfortable saying that this is enough for me to take a sale for that. I think that I'm about to take this all the way down here. That's very, very weak. Now, if I drop down to my 15, right? Because once again, you know, we have to be selling, you know, it has to be like, you see where it started because I'm using that for entry. And when we get down here, this is where this trade would have took profit. So if I already know it's weak, and I already feel like it's weak, am I really, really, really going to try to push past this first take profit? I already know where it's at. Am I really, really, really going to try to push past this first take profit? This should help you understand that even though, because some of these trades come from the harmonic scanner, right? Some of these trades come from the vibrata. Some of them you looked at from the bounce back, because we've trained on all three of those tools. Am I really gonna push past this point right here? To pass this first take profit, past this first support line? Am I really gonna try to push past that? That should really help you. It made it to the first take profit. It's just, well, let's say support line. I would be focused on the support lines because we know that the harmonic scanner uses the Fibonacci retracement. So, but they're still hit on support and resistance lines. So they still hit on support and resistance lines. So you know you're not going past that, because look, and then look what happened. And then even the one that I was referring to on both of them, because they both were NZD trades, look at this one. It turned around and it bounced back up. It never pushed past that. It never pushed past that. It never pushed past that. And so that is how you keep your accuracy up. This is going to help you keep your accuracy up. It's understanding this confluence. This is really going to help you keep your accuracy up. So when using a 15-minute time frame, you want a strong hour candle. I mean, of course, this is that art and not a science piece. This is that it's an art, not a science. Because after this, look what happened. Look what we ended up getting. You ended up getting like a really, look at this. Now we got a nice green candle. See that? Got a nice green candle. So questions, comments, testimonies on what we talked about so far. I'm gonna actually pull up this other one because I want to keep this mark up, because we're gonna still talk about trend lines on Thursday. So this is one from this morning. And I mean, you look at it. So now you look at what happened. So even this one that we took this morning, from this morning, you can see right here. You see that even though it went to that 4 hour, you see where we got. It never went past there. And so this is why we're going to be talking about trend lines, right? Because this, you can really look at this and tell, but this is why we're going to be talking about trend lines, because they're really going to help you understand where you're going to get that. Look at this. Look at what this is. Impulse, correction, continuation, correction, continuation, correction, continuation, correction, right? So if it does not break the trend, if it does not break the trend line, If it does not break the trend line, then it bounces off of the trend line and you get a continuation. So that's how that works. And so you just get to see how all this ties and it works together with basic market structure and how accurate the BYOB cash out is with showing you exactly how that works. Can I explain? Your spread is all about what broker you have. So understand, and we're going to get there too. I kind of got a few things as far as where we're headed for the next couple trainings. I want to talk about these trend lines. And then of course I want to talk about this platform does not include any of that. This is where you analyze. Your spread is based on the broker that you select. So your spread is completely independent of the broker that you select. So if you look at your phone, if you pick up your phone and you open your MetaTrader 4, right? And you look at your quotes and you make sure it's on advanced and not on simple, put it on advanced and take it off of simple. Now, if you have an iPhone, it's real easy. You just switch it over. You just like push the slide little thing over. If you have an Android, it's somewhere in your settings, deep off in your settings. You probably got like 5 or 6 steps to get to it. So, but you want to take it off of, simple, and you want to keep it on advanced. Of course, the spread is the broker fee. So that's the broker fee. So that's the broker fee. And so the broker fee, of course, you want a lower fee. Anytime you could pay lower fees, then that's excellent, right? Anytime you could pay a lower fee, then that's excellent. But you also have to combine that with what is it you're getting? Because some brokers limit currency pairs. Some don't have, some you can't trade cryptocurrency. Some you can, right? Some you could trade on the weekend, some you can't. So you definitely have to balance that, the lower spread with the balance of, are you getting what you want? Some brokers have same day withdrawals. Some make you wait a few days, right? So all of those are factors that come into play when you are selecting your broker. And I personally like same day withdrawals. I don't know about you, but I like same day withdrawals. So questions, comments, because I really don't want to start, this is definitely, it's marked up and we definitely were about to jump into it. Educational platform. Can't tell you what broker that you could select. But that is something you can research. That's part of being a signal. That's something you can research. Definitely something you can research. So I just gave you some tools and now you get to pull the trigger. It works on the daily chart as well. If that's your preference to swing trade. So it's just all about what's your preference. Do you want to swing trade? So if you want to swing trade, it works there as well. So you just have to take all the same applications and just understand. So you know that you're gonna apply it to the daily. And if you trade on the daily, guess what you're looking at after that? Let's drop down. I'm looking at the weekly, my daily and my weekly. So, and my 4 hour. So you just gotta kind of look at it from that perspective. So that means you want to swing trade. So if you're on that daily chart, you are definitely swing trading. You are not trying to be in and out of the market. Now, if you're talking about what I use a daily chart for, looking at this, if you use a daily chart, is to like really get, like if I wanted to come here, use the same trend line, right? Same trend line. You kind of get you an analysis of what's really going on. But is this going to help me trade the 15-minute chart? So is this going to help me trade? I'm not trading on the 4 hour. So it's all about what time frame you're trading on and what style trader are you? The chart that you're on is all about See, because if I'm on a daily chart and I'm trying to trade on a 15-minute, that's an over analysis. You know, you can over analyze something. So if I'm looking at this, I might, you know, just like if I look at currency strength indicator, I'm looking at that to really get an idea of what's happening in the market. But we come look here, you know, when you begin to understand what's happening in the market, I look here and I get an idea of what's happening in the market, right? Because the market is going to feed currency strength. So, but yes, you can go look at currency strength and that's going to help you too. And then also, like right here, I'm on the daily, but okay, I can see, looking at this, okay, I can see GBP NZD has been in a significant downtrend, right? It's been in a significant downtrend, and it's coming up on the floor, right? And entry points. Don't forget, the lower time frame is about tighter entry points. It's not just for scalping; it's for tighter. You scalp on the lower time frame, but the lower time frame is for tighter entry points as well. So that's let me address that. So you want to, like right here, okay, you see where it's at, but that's not gonna help me if I'm on the 15-minute. So that's like an over analysis. That's like me needing Google Maps or something if I'm trying to see what my neighbor's doing. You know what I'm saying? I don't need Google Maps to go see if what my neighbor's doing next door. So I don't need the, you know, so it's you just want to make sure you're staying within balance. You don't want to overanalyze what you're doing or what you're looking for. So, you know, you always want to stay in balance, you know, and stay in a range. So, and when you're talking about the lower time frame, so just like on the news, no, if it's already on your time frame, then you're on the right time frame. So you don't have to change anything if you're talking about the news. Like I keep mine set to my time frame, my time zone. So, right. So like what we were talking about. So if I'm gonna go back to here, okay, let me come back to here. Now, when I'm here and I come up to the hour, okay, I come up to the hour and I know I need to take a trade, right? I need to take a trade. I can drop down to the 15-minute and get a tighter entry. That allows me to enter the trade a lot sooner, right? That allows me to enter the trade a lot sooner. So like, let's say, like, look at how this has been in this nice downtrend, right? Look at how that's been in this nice downtrend. So if you know that had you caught this, you want to, you probably need to be on a higher time frame. So if you caught this, right, and you are like, you see where you got this and they turn around, and this is where you want to try to get your re-entry point right here. So you right here, then I can drop down, okay? I can drop down for a tighter entry. So understand the higher time frames help you understand what the market is doing, but the lower time frames help you get that tighter entry. That's where all the movement happens. So when you really, really understand that, right? So when you really understand that, so like see how I dropped down on the 15? Now I actually can get into this. Like here, I could have got in a tighter entry. So when you really understand that and you really understand what you're doing and you understand how the market moves, then you really can understand how to tighten in and hone in on your entry points. So it's not just for scalping. It helps you see the activity and the movement so you can use it for entry points. So that hopefully that helps, because yes, my scalping does happen on lower time frames. We just did a training on that. Like you're, you know, understanding the type of trader that you are. If you're a scalper, yes, you're on the lower time frames. If you are, you know, just basically different, whatever you are. Oh, I'm glad. So we will definitely, we're gonna still talk about these trend lines. So we're gonna talk about them on Thursday. So we're gonna talk about them on Thursday. You guys had quite a bit of questions on the BYOB cash out, which were good questions. And I pray that it brought a lot of clarity, right? I pray that it brought a lot of clarity to you all, because I know we have a lot of 111s. I know we have a lot of 222s on the call. And, you know, sometimes it's important to kind of step back and take some time and go through this and make sure that everybody is on the same sheet of music and that you all understand, right? And so your questions kind of guided the training tonight. And so, you know, as far as the BYOB cash out and understanding it with the strategy, the time frame confluence, right? Do we have any questions in particular to that with the BYOB cash out, the time frame confluence, you know, and understanding that? I probably got time for one more question that is in particular to that. Because what I want to see happen is I know we flooding the chat already with 777, but I want some more. I want some more. Yeah, GBP does not respect trend line. They are so disrespectful. They are very disrespectful. They are. So I want some more. So trying to, let me see. No, you're gonna be on UTC time on here. This is defaulted to UTC time. If I'm trying on the 15, do I have, so on the 15, so if I'm on the 15, understand the hour gonna give me the swing of the market, the 4 hour will give me the trend of the market, right? So you can kind of understand that the 4 hour is gonna give you the trend of the market, the hour is gonna give you the swing of the market. And whoever invited you out, you know, whoever invited you to this call, you need to get back with them so they can help you get enrolled. They will definitely help you get enrolled so you can access this platform. Mr. Rogers? You guys are so welcome.
Fantastic, ladies and gentlemen. Let's give it up for Ms. Dyer tonight. If you were excited about understanding BYOB market talks and the efficacy that she brought and clarity that she brought to you this evening, I need you to drop a